Okay, good afternoon, everyone. Thank you so much for taking the time, as I always say every single week on these live weekly training webinars. So, this one is very, very important. Number one, it's our last training of June. So, Annuity Awareness Month is coming to an end, and we have put in 110% effort from our marketing team into the annuity department. So I know by now you've seen our podcast episode, our prior trainings, webinars. We're launching a workshop now, which will be very intimate, in fact, very interactive for a small group of agents. In fact, we'll talk about that a little later on in this presentation. But the point is our foot is on the gas and it's pinned down to the floor when it comes to annuities, and we're literally just getting started. We were just talking about this offline, and we have a lot of great stuff, a lot of great resources, technology, e-application systems, all coming to the surface that you're going to love. And I think that when you're an agent out there, especially, you're working with us for 10 years, 17 years, 30 years, whatever it is. And we're kind of known as the Life IMO since 1972. And we started this annuity department about 7 years ago. And we know a lot of you, write some business with us on the annuity side, and primarily it's life. And lately, I would say the past 6 months to a year, all of a sudden, now we're being recognized, and I'm just going off agent feedback and comments, but we're being recognized as an annuity IMO, right, and a life shop. And when before it was the life IMO that kind of dipped their toe in the water when it comes to annuities, right? So it's neat to see this wheel kind of turning, and to see the production, the contracting, everything that's moving the needle on the annuity side. And I want to say thank you for putting your trust in us, right? Number one, because when we were a smaller annuity shop, so to speak, you contracted with us and you said, you know what, Levinson, I'm going to give you all a shot. I love you on the life side, and I'm here for the annuity side as well. So to fast forward now about 6-7 years, and now we're known as a life and annuity shop down the middle. It's just unbelievable. And I hope you see the proof in the pudding. And like I said a few times already, we're just getting started. So some great stuff to come. Okay, what we're talking about today is, I'll shift gears for a second, is we're ending Annuity Awareness Month, which is June, with our consultant, Coach Chris, who's our feature presenter of the day. And what excites me about this, and why we kind of save the best for last, right, for end of month, is because Chris is not tied to one carrier, okay? You always talk to VPs, and some of them are excellent, and they're great coaches and trainers. But let's face it, at the end of the day, they have a vested interest in pushing their carrier and products, right? With Chris, he has a vested interest in you all selling annuities, period. That's it. It doesn't matter the carrier, the product, okay? If a Levinson agent is happy, is appointed, is writing business, we all win, and he gets that. He knows that. So he comes at this from a totally different perspective. He's going to share his thoughts on the greatest and latest. He's going to talk about the DOL, right, and how you can be prepared, right, what to start thinking about now, sales ideas, best rates, all the above. And again, not tied to one or even two carriers, okay? This comes from an industry side. So industry perspective, 100-foot overview, call it whatever you want. That's why I love his opinion and these quarterly calls with Coach Chris. So some great stuff to come. Let's keep moving forward. What I want to do now is talk about what a great opportunity. It's never been a better time. If you're a rookie, if you're a veteran, and you're kind of putting your toe in the water, or you've been full force since 1985, doesn't matter. Okay, now 2024 is, in my opinion, and I think Chris will agree with me, and you all will agree after seeing these stats, never been a better time to start selling annuities, period. Okay? And here's why. Look at the left-hand side for 1 second. Here's what I want to point out. If you want to take your laser pointer pen, I don't care. But by the way, if you have questions, comments, use that Q&A pane. Okay, you can expand it or minimize it. It's part of the GoToWebinar software. And we're going to answer your questions in real time. If we don't get back to you as we're speaking throughout the webinar, we'll call you as soon as we're done, or you can just say, hey, I want a phone call from an annuity marketer at Levinson. Okay, so very, very easy to do, but we want to hear back from you. Good, bad, and different. Very important. Okay, so real fast, what I wanted to point out, in the annuity space in the United States, we're seeing a 13% increase from the prior year. Okay, that's annuities in general. Okay, as of June 24, annuity rates almost, in fact, a little over 1.5% higher than the prior year. So 24 compared to 23. Okay, when you look at June, that's a 1 year difference. You're looking at rates on the average of 5.24 to 6.46. Huge difference. Okay, let's go down one more bullet. According to Prudential, who we all love and know, and we know they're a great company, great financials, great stability, 71% of women are interested in annuities, but only 6% include them in their retirement strategy. Okay, another hint, right? You need to maybe look at different markets, spread awareness, educate, get the word out, right? That you are the guru, okay, the coach, the educator, call it whatever you want. All right. And then the bottom kind of seals the deal. The survey also notes a record number of Americans are reaching traditional retirement at the age of 65 in 2024. Never been a better time, period. Okay. Let's move over to the right-hand side. 5-year FIAs, S&P cap rates are up to almost 24%. So I'm going to let Chris dive into this further. I don't want to steal any of his thunder. But again, there's never been a better time, and the proof is in the pudding, and you'll hear from the expert in just a few more minutes. Let's keep moving forward. What I want to talk about next is what's most important to us is the agent. Okay, we don't sell on a retail level at all. Okay, we don't have a call center that runs out of our back room. That's a conflict of interest. Okay, and I always say this, but it's so important to us. In fact, I think it should be illegal, right? If you are an agent and you're sending applications to an IMO to process for you, and that same IMO is selling on a retail level, that means you're all fishing in the same bucket. How is that ethical? It's not. Okay, you need to pick one or the other. As far as an IMO or a GA, right? Are you a wholesaler and 100% wholesaling distributor, or are you selling? Okay, and that's it. And you, as an agent, need to ask these questions. So anyway, my point is, you are number one to us. You're our customer, okay? Because we don't sell. We are wholesalers. So it means the world to us when Patrina, when Stuart types in on Facebook, on our Google reviews page, and says, Beth is awesome. She's always notifying me of what I'm eligible for and has excellent follow-up. That is what moves our needle internally at the end of the day. We have 24 employees now in 4 different states, okay? And everyone is focused on our customer, which is you, the agent. So again, I love this one. Bottom left corner, Josh is the Michael Jordan of the insurance industry. Not only does he respond in a timely fashion to my emails, but also answers the phone when I prefer to speak with him rather than an email. Josh playing hurt is better than most playing at full strength. His information and knowledge is unparalleled. You have an uncut gem. Okay, Stuart, that is unreal. And when this came in, Josh was actually sick and working from home, and Stuart sent this email to us because he couldn't believe the effort, right, that Josh put in to his case, right, in his situation, and calling him, emailing him. That's how everyone is here at Levinson and Associates. Josh is great, but we all kind of live by this. And yes, it's easy to just text and email in 2024. It's hard to pick up the phone, okay? When you have 23,000 agents all over the U.S. with 24 employees, right? It is difficult. It's challenging, but everybody here knows we have a rule. When you, our customer, the agent, say, hey, I got a guy, got a girl that I'm with right now. I'm going on an appointment. I need a phone call. You have to call that person right back same day, no questions asked. Okay? You don't get a digital voice operator and you get a call back the next day or in 2 or 3 days. We know what happens, right? You as an agent, you have to strike while it's hot. Okay? So again, Stuart pointed this out, but we live by this. And if you're not getting this kind of service from anyone, and our team, right? Doesn't matter in what state or whatever, they're 11th and Associates employee, you don't feel this, let me or Carrie know. We're going to jump in and make it right. There's a problem, okay? But Stuart, Patrina, thank you. Means the world. Let's keep moving forward. I know I'm ranting a little bit, and I want to get to our feature presentation quickly. A lot of agents aren't aware. If we move over to the left-hand side, the MAP program, so this is available to all street-level agents with Levinson, okay? Doesn't cost you anything. As soon as you start writing, minimum of $150,000 FIA premium, you're in. Done. You win. $250 marketing allowance. This could pay for your leads. If you have your own system, you want to use our co-op discounted system, totally up to you, or an Apple Watch. But what you're going to notice here, the minimum is $150,000. It's not $10 million. It's not $15 million of a certain carrier, certain product. No. Okay, we make this very achievable for everyone, very realistic. Okay, and that's important. Why? Because this could pay for your own lead campaign, and you can double dip. What do I mean by that? Most of our annuity carriers have their own incentives going on right now. We have a whole section on our website. We're talking cash, trips, leads, you name it. So once you're at, let's say, $1 million with us, okay, which we know will take some time, you're getting $1,000 cash, okay? You can use for, again, marketing allowance, leads, you name it. Plus, you just got a 5-day trip to Europe, you know, on a carrier, whatever carrier has that incentive. So double dip, we encourage that, okay? And then on the right-hand side, same exact thing goes. We have a 5-day, 4-night Vegas trip at the nicest hotel in Vegas, the Aria and the newest, okay? And we give you cash for your trip, and we're not talking big bucks here, okay? Let's look at the top tier. It's $1 million in FIA production, okay? Bottom tier starts at $500,000 for 3 days, 2 nights. So again, you don't have to set the world on fire in the annuity space, okay? We're talking about $150,000 left-hand side, right-hand side, $500,000, and double dip with the carrier incentives. We encourage it. Let's keep moving forward. What I want to do next real fast is talk about our way that we update you all, okay? We know there's a lot of moving parts, especially in the annuity space. So what we have here, if we can go to the next slide, we call it the alert, okay? Annuity alert. So 2 parts to this. Real fast, what I want to mention, if you're, let's say, selling on the life side, supplemental side, annuities, every other week, okay, you're going to get the Levinson 411, okay, every other week sitting in your inbox. What is it? Every carrier product updates, changes, rates, maybe a new carrier, new technology, whatever it is, new lead program, you name it. That's going to be sitting in your inbox every week. It's like our newsletter, every other week. If you're not getting it, let us know. Now, on top of that, every single Monday, we have the annuity alert. This will be sitting in your inbox, okay? And this is focused on the annuity space, latest and greatest rates, trainings, all of the above, just focused on annuities. So keep your eyes peeled for both. One is every Monday, one is every other week, okay? Let's keep moving. By the way, we're starting text communication as well. If you prefer to be text, you just let us know. You'll have an opt-in email that you'll get tonight. And if you prefer text message, just let us know. And there's a link in the thank you email. You can just click, and then it'll go into our system automatically. So you'll receive the email before we leave tonight. It'll include contracting, brochures, everything that we're going over today. Okay, so that will be in the inbox tonight. I have one last slide, and then Chris is going to take the wheel. So real fast, we're going to have our webinar incentive when Chris wraps up at the end of today. We're giving away the Apple AirPods, brand new set of Apple AirPods and IUL prospecting book. So whoever answers our question first and correctly will announce your name right before 3 p.m. Eastern Time. Okay, my last slide, like I said, and then Chris is going to take the wheel. So I'm very proud of how far we've come in a short time when it comes to the Levinson Annuity Department. I mentioned it a few times. We now have 4 full-time employees focused on just annuities. Okay, very important to us and very proud. So what you're also going to notice on the left-hand side is over 30 direct IMO contracts, carriers that you have access to, that you can leverage. And what you're going to notice is we don't have a lot of overlap. Each carrier kind of represents their own niche in the space. And Chris is going to talk about this a little more, but as long as you know and you're comfortable, right, after you speak to RJ, Ashley, or Josh, and they're giving you the best rate for that client, right, or the best income rider, whatever it is, you need to know, hey, what I'm presenting to Johnny or Shelly tonight at 8 p.m. at the living room table, that's the best they're going to find as far as carrier ratings, interest rates, okay, commissions, because you still got to make a living, but you have to know inside that, hey, you know what? Josh knows best. And my client's not going to find anything better when it comes to the big picture, or RJ or Ashley. So it's very important. Again, you're our customer, right? I've said it a few times now. They have a combined over 70 years experience just in the annuity space between home office, okay, and brokerage, IMO. So very important. You see the headshots there of Josh, Ashley, and RJ. Then we have Ashley K, who handles all licensing, new business, just on the annuity side. Okay, let's keep moving forward. What I want to do now is I want to introduce our featured speaker, who's also a great friend of mine, one of the best annuity coaches, consultants, call them whatever you want, but you're going to learn a ton. So make sure your pen and paper is handy and you have your question pane expanded. Chris, are you there, buddy?
I'm here, Bill. Thanks so much for having me, as always.
As always, I love these calls.
Fantastic, fantastic. Well, thanks everybody for jumping on board here. Sorry if I sound a little stuffy. I'm actually recovering from COVID that I had over the weekend, but we're back. We're better than ever. So again, always appreciate Levinson and Associates having me on here. I want to jump right in because this is an extremely exciting time, as Bill showed you with those numbers. I mean, annuity sales are off the charts. And folks, you might be on this call. You may remember when annuities were a bad word. It almost seemed like if you talk to somebody in their 50s or 60s 10 years ago, they were saying, oh, annuities are terrible. My uncle had an annuity. I had an annuity, blah, blah, blah. It seems like the entire consumer focus has really shifted on this. And Bill showed you some of those numbers. And I want to show you some of the things that you can do today to start having those annuity conversations, growing your sales, and really expanding things here. And you can start this summer. Yeah, we're seeing some great things out there. I'm just going to jump right in here. Let's talk about this current market. I always like to start off by talking about the current market. I just did a presentation with Levinson and Associates in April. And folks, look at where the S&P chart was back in April. This was April 17th. I think that was the day before we did this presentation. S&P was at 5,022. It was up 5.89% year to date. Look where it's at today. Well, this was yesterday, to be fair. Yesterday, 5,477, guys. It's gone up 10% since the last time we spoke. 10% since the last time we spoke here, just in April. Up 15.5% year to date. Folks, how impressive is that? All good things come to an end, sure, but we are seeing some outstanding runs in the marketplace. So talking to my veterans of annuities here for just a minute, my folks who've been doing annuities for a long time, you know, if you've been doing MIGA sales, if you've been looking at those 5.5% MIGAs, staying away from those index products, look at these numbers here. If your client was allocated 100% to the S&P 500 index within an indexed annuity, and they had a 10, 12, 15% cap, because folks, there's companies out there with 15% caps on the S&P 500, they'd be taking advantage of all these gains right now. It's a great time to be talking about these products. And if you thought, oh, the market was too hot last year for an index annuity, look what it's doing now. A great time for folks. And I mean, it's just impressive what this is doing right now. And, are we going to see changes in the marketplace? More than likely at some point. But right now, and all the chatter has been that this market hasn't been growing, hasn't been doing well. Look at what it's doing, 15.5% up year to date. Where's the market going? I always like to flash this because look at where the Dow is at right now. Look at where the S&P is at. The NASDAQ has been fired up because of stocks like Nvidia, stocks like Apple that have shot up as well because of their AI announcements. All of this stuff a little more technical, but the market is doing some fantastic things right now. Clients can take advantage of that with your fixed indexed annuities. It's easy to pigeonhole yourself into that MIGA conversation, but look where the market's going. Look where your clients can really take advantage and get some gains in those annuities. It's an exciting, exciting story. Folks, and then you look at where the market is going here. Last time I presented 2.5 months ago, the Federal Reserve was talking about doing 3 cuts this year to interest rates. Now they expect to cut interest rates just once in 2024. That is great news for annuity rates, right? Maybe not if you're trying to get a mortgage, I understand that. Maybe not if you're trying to finance a boat or something fun like that. But if you are looking at annuity rates as a whole, saving money, putting money into annuities, you're not going to have big rate decreases take place here, especially if this rings true. One cut this year, you're going to still see these rates singing. You're going to see them higher. I think Bill mentioned that you have, 1.5% higher than the banks are offering with these annuities. I mean, it's an outstanding story to tell. And from what we can see here, it's going to be a story you can tell through the rest of the year as well. And as Bill mentioned too, annuity sales are soaring, folks. I mean, the first quarter was a new record. This is out of Barron's. I mean, every quarter seems to be larger than the quarter that preceded it. This article came out April 25th. Look at some of these numbers here. They differ a little from Bill's. I think maybe variable annuities might be in this one too. But you can see U.S. annuity sales hit 113.5 billion in the first quarter, highest first quarter sales figure since the Insurance Industry Trade Association (LIMRA) began keeping these stats 40 years ago. First quarter sales were up 21% from the same period 1 year ago, according to LIMRA. That's amazing. We're just seeing huge things. Again, annuities are no longer a bad word for your clients. Your clients are interested. They know what these products can do. I know a lot of agents who are running leads. They are never the first agent to talk to their clients, okay? Because they are talking to people. They are educating themselves. Your clients want to know about these products. You got to be the person to provide them the best options possible. And as you can see, annuity sales expected to continue breaking records, as we had mentioned. And then look at this, the coming DOL fiduciary rule likely pushing annuity sales higher. Kind of an interesting thing, right? You have this regulation that's kind of looming, kind of like a cloud over everything right now. That coming DOL rule likely pushing annuity sales higher. That could very well be true. If you have more regulation possibly coming, you might have more sales getting pushed here before that regulation does come. So this is a really good segue for us to kind of talk about this DOL fiduciary rule a little bit. And folks, if you don't know, if you're not familiar, the DOL has tried to push some rules on annuities. I remember starting in 2016, they were looking to push some new rules where you'd have to be considered a fiduciary on your client's money, much like someone who is a securities licensed representative is considered a fiduciary. That is what the DOL is trying to do. And that requires some different paperwork, some different ways that agents are paid, as well as different ways that carriers can incentivize agents at the same time. So I want to go into this DOL rule a little bit, but I also want to mention something, and I'm going to mention this at the very end. What we know now is going to be completely different than what we know a week from now, a month from now, all that good stuff. You're going to see so many changes happen with this. I'll give you an example. I gave a presentation for 70 agents in May on the DOL fiduciary rule. I used all these different slides, all these different conversations on what to do, how to prepare. When I sat down after my presentation, an agent showed me his phone and boom, a lawsuit was placed against the DOL right then and there. So right now you have lawsuits placed on the Department of Labor, 2 of them, if I'm thinking correctly. You have upcoming legislation against the DOL rule where they're putting ways to torpedo this thing into the new budget bill. And then you have an election coming up as well. So I say all of this because we don't know what's going to happen. Nobody does. If any organization's coming up to you saying they have the solution to DOL, all of that, nobody knows for sure. I can just tell you that right now. So let's talk about this DOL rule a little bit. And I'm just going to read this line here like a bad professor. Anyone who holds themselves out as a trusted advisor when providing advice will become an investment advice fiduciary, meaning they must put the investor's interests ahead of their own. The intent of the rule is to limit conflicts of interest and close loopholes. Okay, here are some facts that you need to know about the DOL, just keeping it very simple. Parts of the rule are set to take effect September 23rd of this year, but it won't really be fully effective until September 23rd of next year. Okay, that's important to know. So they did strategically kind of create this DOL fiduciary rule so that it would go into effect before any presidential election takes place, anything like that, if you know what I'm saying. So September 23rd of this year, this is likely going to go in force. Even though there are lawsuits against it and things like that, you're likely going to see this go in force. So it's best to start preparing now, and I'm going to show you how to in just a minute. Now, the important thing to remember is this only affects your qualified money sales. If you are writing someone non-qualified annuities, that post-tax money, that after-tax money, you don't have to do anything differently. This only affects your pre-tax qualified money sales. Life insurance sales are generally unaffected, and the big thing is going to be documentation. You have to store records of your sales process for 6 years. That's kind of the key right now. Qualified money, documentation is key. Let me talk a little bit more about what I mean by that. What can I do to start? What can I start to do today? Folks, what I would start to do, this thing is going into effect here in September. Look at some of your old qualified cases, do a comparison of features, and document those comparisons. The big thing the DOL is going to want to see is that you went in to an appointment, you talked to a client, and you came with the best possible solution for your client. You didn't go after the best commission, you didn't go after, some type of incentive. You sat down with the client, you talked to them about an income annuity, let's say, and you got them the best possible income for their situation. You document that, you keep that in your records for up to 6 years. That's going to be key. And I know the folks at Levinson and Associates have tools for you, like income comparison tools, things like that. So if you're running an income comparison and you got the income with one company, right, company A, let's say, right at the top, and you sold company A, well, what is your reasoning for selling that product? Well, they had the best income according to my spreadsheet here, and that's what the client ultimately went for. Boom. Document that type of information. There's going to be some different documentation methods that are available. I'm sure those will come out here as we get a little closer to the DOL. I would highly recommend attending different carrier training webinars and things like that. And then, of course, begin to utilize the updated PTE 8424 form. Now, I don't have a screen or anything with people. I'm hoping some of you know what the PTE 8424 form is. But basically, folks, if you have a PTE 8424 form, this is a form that you should be using anytime you're doing qualified annuity sales. Okay, anytime you're doing qualified annuity sales, you should be using a PTE 8424 form. And really, this form helps explain 3 things: the nature of the relationship between agent and insurance company, the commissions you'll receive, and then any charges that are going to apply under the annuity contract. So the relationship between agent and annuity company, the commissions the agent receives, and any charges in the annuity contract. This is a 1-page document. It's universal, folks, so you can use it with all carriers. And the folks at Levinson have a copy for you, which I'm sure they can provide for you after this call. But if you're doing qualified sales, at the end of the day, what this means is you need to disclose your commissions to your client. You need to disclose what you're making, what that commission, well, not necessarily what you're making, but the percentage of commission that you're receiving on qualified sales. That's the big key of the PTE 8424 form. The client keeps a copy, you, the agent, keeps a copy, and you keep it stored for 6 years. That's the big key with the 8424 form. Now, again, I mentioned, folks, that there's going to be a lot of changes. The DOL is updating the PTE 8424 form for this upcoming rule here in September. They haven't released that yet. So we don't know if anything additional is going to be added to it. So the best advice I can give you is what I had on this previous slide here. Communicate with Levinson and Associates as new updates and new changes come out, because you're going to want to know and be ready for things that change with this DOL fiduciary rule. You know, a lot of people ask me my opinion on it. Do I think it's a terrible thing? Do I think it's a good thing? You know, it's a bit more paperwork for qualified sales. It's a bit more paperwork for qualified sales. If you're doing your qualified sale, a qualified annuity sale, you need to be able to show how you came to the conclusion that that is the best product for your client. You need to do your PTE 8424 form, and you need to store it. It's not a lot more complicated than that. Of course, we'll be doing some updates for you as things get a little bit closer, as we get a few more things a little more concrete and everything, but that is absolutely what you can do today to kind of get started for this thing. I highly recommend everybody screenshot this page, write down some notes. I think that's some solid information for you. And Bill, I'm sure you guys are getting some questions, anything like that. I don't know if this is a good point for me to just stop. Did you have any questions that you guys wanted me to answer or anything like that for you?
Let me see. I know we're answering most of these as we go. Is there anything, Andrew, or do you want to wait until the end? Do we have anything you didn't answer?
So far, so good. Actually, it looks like everybody is getting the answers from Chris's presentation.
Okay, so Chris, we're good. Let's finish up, and then we can always patch you in after the call if we need to.
Perfect. Not a problem. Not a problem, folks. Again, if you have questions, you know, I know Josh, I know Bill, I know they're going to have the answers for you when it comes a little bit closer to time for the DOL rule there in September. So we're all happy to help. Let's dive into some meat and potatoes, though, because I didn't want to spend all this time on just this DOL rule. We have some incredible things happening right now. And, you know, we'll start with MIGAs. And I just put some basic MIGA info up here for you, folks. I mean, these rates are current as of yesterday. These are all $100,000 high bands. These are rates in Florida. Like Bill said, I'm not tied to any one carrier. I want you to see some of the best rates that are out there. There's some really nice stuff. No, we are a little lower than some of the highs that we saw maybe at the beginning of the year, but these annuity rates still look fantastic. I mean, if you're comparing them to bank rates, if your client's wanting to put money somewhere more secure, somewhere away from the bank, somewhere where it's going to grow tax deferred, a MIGA is an outstanding story, and you have some really, really nice options here with the carriers that you see on your screen in front of you. You know, when I did this presentation in April, I talked about income annuities. And I got to be honest with you, folks, I'm going to spend a little more time on income annuities because there have been changes since we spoke in April. And I want to make sure we drive this point home because maybe you're on this call and you're kind of sitting on the fence with annuities. Maybe you're sitting on the call and saying, Chris, I just don't know about these fixed index annuities. I like my MIGAs. I know my client knows what they're going to get. I mean, this is such a great time to talk about these index products. Remember the example I showed you at the beginning of this presentation. Look at what the S&P 500 has done this year. It's up over 15%. Your clients are getting outstanding par rates and caps with the S&P 500 right now. If you're putting them just in MIGAs, you may be doing them a disservice. Those index products are absolutely seeing some outstanding growth in them right now. And of course, if you're the type of person that thinks a recession is coming or you're going to see a big market correction, hey, that's okay. Your clients' gains are locked in. So let's say they put in 100,000. The annuity gained 15% this year. It's now at 115,000. The market tanks. Your client still has 115,000. They don't go down from that. And now they have an excellent opportunity to get back up in the market and get some more gains the following year in this product. It's a beautiful thing, folks, and that's the power of annual reset with these annuities. But let's go back to income here, because even if your clients are nervous about the instability of an index product, income is king because income is guaranteed. And I want to just spend a little bit of time talking about some of these income products. Folks, FIA income is great right now. I mean, there's a lot of income products that have immediate income with fixed index annuities. They're beating out SPIAs. It's the first time I've seen that happen in forever, to be honest with you. SPIAs were always the best for income annuities, immediate income. Now you're seeing FIA income look just as good and offer even more features. Look at these numbers. We all know the statistic, 10,000 baby boomers are turning 65 a day. They are needing guaranteed income. They need that personal pension. They need that check to come in. The first baby boomers will turn 80 in 2026. That was kind of an interesting statistic to me. The first baby boomers will be turning 80 in 2026. A real interesting number there. And I mean, 80 is a big number for a few reasons, because they're needing that guaranteed income, and then they're needing products and features like long-term care, right? I talked to carriers like National Guardian Life and One America and even Equitrust with their new LTC product. The average age of turning on long-term care for a client is anywhere between 81 and 83. Your baby boomers are turning 80 in 2026. It's a great time to talk about long-term care or fixed index annuities with long-term care features like we're about to go into here in just a minute. And what I like so much about these products, folks, the income is totally guaranteed to your client for the rest of their life. Tons of options, tons of features as well. Let's look at a product real fast with immediate income. Now, these numbers are tiny. I could have blown them up, but let's just use an example. I got a 65-year-old male here. If you look at my spotlight, $500,000 going in. He turns on immediate income with this thing. Client's getting $39,650 a year for the rest of his life. $39,650. Now, if the client were to wait 5 years, that number would be $59,460. If the client were to wait 10 years, you're looking at $85,000 a year guaranteed for the rest of their life. With a company like F&G as well, an A-rated company, a strong-rated company, getting some outstanding guaranteed income. And remember, this is on guaranteed rates. This is assuming the annuity grows nothing in the index every single year. And yet, look at that withdrawal. Look at that guaranteed income your client can get. And here's what I really like about this product too, and the next product I'm about to show you. It has this impairment multiplier, an ADL-based impairment multiplier. If your client can't complete 2 out of 6 of the ADLs, the activities of daily living, their income can double for a period of up to 5 years, as long as there's accumulation value in this F&G product. Now think about that. Let's say your client turns on income in year 4. That income is $55,400. They're unable to complete 2 out of 6 ADLs. They don't have a long-term care plan. They can double that income for a period of up to 5 years. It's now $110,800. Folks, we all know long-term care is expensive. The average cost in this country is $6,000 a month for long-term care. This is money when they need it the most. This is a company in F&G that's offering some of the best immediate income for clients. It's important to note, some of the best immediate income for your clients. And they have features like this impairment multiplier as well that can double income when your clients need it the most. Features like that tell such a well-rounded story for your client. Your client's going to sit with you. They think they might be talking about life insurance. They think they might be talking about an annuity with floor protection, with tax deferral. Those are the things they know. Here you come in with a story of guaranteed income, LTC features. Oh, and if you never use it, there's a death benefit to it as well. An amazing three-pronged approach that you're getting with products like this. That's why we like it so much. But let's say we're not looking for immediate income. Let's say we're looking for income in 5 years. I'm going to look at Equitrust now because Equitrust has some of the best income in year 5 and year 10. F&G, a little bit better in that immediate income. Equitrust doesn't start income right away. You have to wait 1 year, but they do better with that 5 to 10 year range. You look at this Market 7 product right here, and folks, your clients are going to get a 25% bonus to the income base. It says it right there. And look at this income, $60,624 when you turn on that income in year 5. $60,624 of income. This is, again, $500,000 on a 65-year-old male in Florida. That's guaranteed for the rest of the client's life. And again, what I like so much about this product with Equitrust, I'm going to jump off my spotlight here. Oh, sorry. What I like so much about this product, get my spotlight back. Again, $60,624. This is guaranteed to your client. You're sitting down with them. They're having a conversation with you about annuities. You bring up fixed index annuities. Oh, I don't know. I don't know how it's going to grow. I don't really understand it. Well, I know you understand guaranteed lifetime income. And that's what this can afford you. This is an example of a client just turning it on 5 years from now, $60,624 guaranteed. Product has a 7% roll up that it's doing guaranteed to the income base. An amazing story. And again, Equitrust has the chronic illness doubler. So if your client can't complete 2 out of 6 ADLs, that income can double for up to 5 years. Folks, it's an amazing story. It's a great story that you can tell, offering those guarantees. Let's look at an example here in year 10. Notice we're going to be using a different product here, even with Equitrust. They're just killing it in this game right now. Income in 10 years with the Market 10 bonus, $85,278 is the income withdrawal there in year 10. Your client's 65, they're saying, maybe I'll turn on my income in 75. I'm getting Social Security. I'll just push it off until then. $85,000 a year guaranteed when your client's original investment there was $500,000. And look at that, $40,000 premium bonus that your client's getting to this as well, to his real money, and then an income withdrawal in the future of over $85,000. Folks, the income story is so easy to tell. I love pages like this too because it's all in the illustration. If your client said, well, what if I want to turn it on before I turn 74, 75? Well, take a look at this chart here. These numbers are all guaranteed to you. It's an amazing, amazing story to tell. And so many folks need it right now. They need that personal pension. They need to add on to their Social Security dollars. They may not think they're going to use that qualified money that's sitting there, but this can create such an excellent personal pension for your clients. I even like that term to use, personal pension. Just focusing real fast on Equitrust, because again, I showed 2 different products. They really have 3 products. This is a heat map from Equitrust and when to use it. It's a pretty cool little idea of when to use the products, because let's say here in this example with this client, if you need earlier income, the Equitrust Market 7 is winning out among Equitrust products. It's winning out across the board. When Josh or Ashley or RJ do one of those spreadsheets for you for income, you'll see that Equitrust is at the top very, very often. When will you use the markets? Let's see, Market 10 products. Well, actually, let's go back here. So yeah, the Market 7 product is at issue age 60, doing great in those early years. Notice the Market 10 product is doing great in years 9 through 15. That's really the point I wanted to make here. When do you use which product? Well, Josh and Ashley can help you, but if you're looking at a 60-year-old client, the Market 7 product is going to have outstanding income in those early years. Look at that. In those early years, outstanding income. The Market 10, going to be a little bit better for that later years income. And then you have the Market Power in there too, folks. That's a 12% premium bonus product. 12% premium bonus product. I'll tell you how we can use that here in just a moment. But look at those numbers. 65-year-old male, $500,000 in Florida. If you're looking at some different options here, immediate income, income in 5 years, income in 10 years, you have an amazing story that you can tell that client to be able to maximize those dollars, create that personal pension, have income for the rest of their life. So your clients want more. Lifetime income is great. What else is out there? Folks, you have death benefit riders that are available. Maybe they want to leave a legacy. All of these fixed index annuities with income, they can leave a legacy for your client if they're not using that income right away. I mentioned the income doublers for LTC needs. There's a lot of options out there, folks. You have ADL-based income doublers and you have confinement-based income doublers. Your ADL-based income doublers, those are provided by companies like Equitrust, American Equity, F&G, Nassau. Confinement-based, North American and Athene. There's reasons to look at both, right? But it is something important for you to know that if there's a confinement-based doubler, you have to be confined to a nursing home in order to double that money versus the ADL-based ones. So something to pay attention to. You know, your clients want more. I showed you fixed income products, just fixed income, guaranteed income that's not going to grow any more than it is. But there are a lot of increasing income options too. And I know Josh and Ashley can run you illustrations for those. Increasing income is an outstanding conversation. What is a big fear for clients right now? Inflation, 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 inflation. If you offer increasing income, you're offering inflation fighting income is what you're doing. So you can tell your clients, look, this is great now, but what's that money going to be 10, 15 years from now? Let's look at some increasing income options as well, have a more well-rounded conversation. And then of course, higher caps and rates to accumulation value, folks. Your clients want more. These products now, these income annuities, these fixed index annuities with income riders, they have higher caps and rates than they have in years. So that creates a great story of accumulation as well as guaranteed income for your clients. Let's look at some bright ideas here because we've covered a lot of information. I want to make sure we get this in front of you, and I do have a few bright ideas. You know, some of these are copied from the last presentation that we did just in April, but I've expanded upon these because I'm having so many fixed index annuity with income rider conversations right now. I want to make sure we share those with you guys today. I want to talk about annuity replacements for income. This morning, about 3 hours ago, I had a conversation with an agent. This agent comes up to me. He says, Chris, I have about $2 million in annuities I need to move. And there's various reasons why he needs to move them. But a big reason why is because income today is so much higher than it was even just 3 to 5 years ago when he originally sold these annuities. And what's interesting is that it used to be that you couldn't really move an annuity that's only 1, 2, 3, 4 years old. Today, with these higher caps, higher rates, higher premium bonuses, and higher income, it is very possible. I don't want anyone on this call to go into an appointment tomorrow, see somebody has an annuity that's 3 or 4 years old and say, oh, there's nothing we can do about that. There absolutely is something you can do about that. So I'm going to read these bullet points. Clients who bought annuities 3 to 5 years ago, they have low rates. They have low caps, they have low pars, they have lower income to them. You can replace them with income products or better accumulation annuities. It's a win-win for your client. It's a win-win for you. Some carriers, this is the part I added, some carriers will look at replacements that are under 2 years old. That's unheard of. But when you can write on a cover letter that the annuity you're replacing, you have a premium bonus that covers a surrender charge, and you have a much better income than the client was promised before, folks, you have an easy sale there that will pass suitability. And with products like Equitrust, American Equity, North American, Fidelity and Guarantee, again, I'm not tied to any one carrier, you can do these replacements. So if you're talking to any client or prospect and they have an income annuity now, see what you can do to replace that income annuity. Get an annual statement, send it to Josh, Ashley, RJ, any of these folks, have them work on it, because they can do great things for you on the annuity replacement side, and it makes perfect sense for the client to do so. Create a lasting benefit with enhanced income. This is bright idea number 2 here. Okay, so I mentioned just a minute ago that a lot of your clients, that a lot of products now have features, and those features are like your ADL-based income doubler or your confinement-based income doubler. Well, here's something I found out here very recently. It used to be that your client could double their income for up to 5 years, but there had to be accumulation value available in the annuity, right? And we all know this. If you've done these sales for a little while, if your client has been taking income from the annuity, they've been drawing down dollar for dollar what the accumulation value is, and there won't be accumulation value there for very long. So what happens is your client can't double their income, because there has to be accumulation value greater than 0 in order to double income. Well, here's what I found out. Nassau and Equitrust, they will enhance income for 5 years even if the accumulation value is 0. They will double the income if your client can't complete 2 out of 6 ADLs for 5 years, even if the accumulation value is 0. That is such a huge story that you can tell somebody, because I've seen plenty of examples where someone has been receiving income for 8 years, their accumulation value is 0, they can't complete 2 out of 6 ADLs, and now they can't double their income. What's really cool, again, Nassau, Equitrust, they will double that income for 5 years, even if the accumulation value is 0. Folks, that's an even better long-term care story that you can tell. I don't know how many of you do long-term care on this call, but we all know that underwriting for long-term care is pretty stringent, right? It's tough to get people through with long-term care. It just is. It's tough to get them through underwriting. Even if you use like a John Hancock product for IUL and do the long-term care rider on that IUL, that's underwritten separately from the IUL. So they can be declined for the long-term care, but still approved for the IUL. There's no underwriting here for this type of thing. It's a great option for your unhealthy clients, maybe older clients who can't get long-term care or who don't have a plan put in place. You have to have that conversation. Which brings me to number 3. That's really what you're doing here at the end of the day. You're building a real plan for your clients. You may have gotten your client's attention by pitching a 5.5% MIGA. You have this conversation about guaranteed income, about long-term care benefits, and about leaving a legacy with a death benefit if you don't use any of it, and you're building a real plan for your clients at the end of the day. You have to understand what they're getting in retirement. You have to understand what kind of Social Security they're getting. You have to find out if they have long-term care coverage. You can help with all that. You can help them with guaranteed lifetime income for the rest of their life. You can help them with a long-term care type plan. I don't want to say this is an exact like long-term care plan, but it does double income when your clients can't complete 2 out of 6 ADLs, and then it leaves a legacy as well if your client's not using that money. You're building a real plan for your clients. And now with my number 1 example up here with these annuity replacements, it's easier than ever to get that done as well in this high interest rate environment. So it's an amazing story to tell, folks. I hope all of you take advantage of these annuity replacements. Take advantage of the products that these folks at Levinson have, because they have all the strong income products for you as well to win any matchup you're going up against another advisor. And folks, that really is the end of my presentation there, Bill. I don't know if you had any questions or anything else you wanted me to elaborate on for you.
No, that was perfect, Chris, and we appreciate you jumping on, even not at 100% yet. So thank you so much. I mean, it felt like 110%, so we really appreciate the effort. What we're going to do, I need to wrap up in about 3 to 4 minutes, so I want to hit on a couple other slides, and then, Chris, we'll patch you back in with any questions that we couldn't answer. So I will keep you posted after the webinar, and then for the rest of the agents, just sit tight here. And as soon as we are done in about 3-4 minutes, I'm going to ask our question of the day and give away these Apple AirPods and the IUL prospecting book. Thank you again, Chris. Let's move forward. What I want to do real fast is talk about some of the value add. Why Levinson, right? You have some great carriers, maybe some contracts with a competitor, another IMO. Okay, hopefully not. Hopefully you're working with Levinson and most of your business comes to us. But we do understand most agents work with at least 2 to 3 agencies, which is completely fine with us. You're not captive by any means. But I do want to mention for you, or if you have any downline agents or all the above, you need to have things to market, platforms, sales ideas, lead programs, trainings, right, that are exclusive to you, that we can co-brand with your name on it, right? You can start to market these things. So that's where we stand apart, and we're not just another Me Too annuity or life IMO, okay, number one. So, in fact, we just had Charles Samuel on episode 52 on the podcast, and what was so neat about this is we recorded this live, me, Carrie, and Charles, and we went into sales strategies to open the annuity door, okay? And like I said, it doesn't matter if it's day one in the annuity space or you're selling annuities for 28 years. You are going to love this episode. So we also did a live training that same day with 9 agents in the conference room. In fact, we sent an email out with 2 links. One is going to be the podcast. One is going to be the seminar training. And then we have a workshop that's exclusive to Levinson. So we're allowing about 20 to 30 agents in this private virtual annuity training workshop. It's going to run for 8 weeks. It's free. Okay, as long as you're active with us. If you're interested in the workshop, let us know. We'll get you signed up. But I need to mention these things because it's so important. I don't want to get into it now because we're running short on time, but we sit down literally on a daily basis and say, what can we do different to help our agents sell more products, right? And to also stand apart from our competitors. Number one, and that's how you should be looking at the landscape as well, right? Why should these consumers think you versus the other 900,000 agents in the country? Okay, so we look at it the same way and we take it very serious, and that's why you're seeing these platforms in front of you. Let's keep moving forward. If you want to leverage our Stonewood Platinum membership, we offer a discounted rate, or if you want quotes, presentations, just let us know. We'll run these at no charge for you, another value add. And then if you're writing business, by the way, we'll actually pay for the platform. It's a monthly reset, and we have an incentive coupon on our website. Let's keep moving forward. So every single week, I promise you, we'd have some sample social media posts. You don't have to go reinvent the wheel, as I always say. North American, right, who has some great products. They have 3 awesome social media posts that we can help, number one, co-brand for you. We'll also send them out to you. The first one on the left side is the balance accumulation consumer video. And then in the middle, it's a risk assessment calculator. And then on the right-hand side, the market volatility slider. These are all tools and ways to educate the consumers, ways that you can move the needle and open new doors for the annuity conversation. Let's keep moving along. One thing that I want to point out too, without getting into a rant. So I sat down with Charles, it was a week ago, and we literally were in trainings for over probably 4 hours. I mean, the entire morning, as a matter of fact. And what I learned, right, and you got to think about this. We have an annuity department we started about 6-7 years ago. What was so unique for me is you don't have to get so caught up in all the moving parts and make this a complex sale. You don't have to get intimidated by the annuity conversation. You keep it short. You keep it to the point. You ask a couple of basic questions, and the consumer will lead you to the sale, right? It's about retirement. It's about income, and it's about how much of it do you need. Okay, and then you're going to come up with the product and solution to get there, and boom, the sale is made. And it's literally that easy. And when you see the Charles training, you're going to say, Bill, you were right. And I'm glad I took the time to listen. So even if you want to check out the podcast, but I'm telling you right now, after you are part of his training, you will agree with me. I promise you. If not, then there's something that I missed. And I think I'm pretty much 99% on point here. And I think you'll agree. Left-hand side is spreading the word, Ringy. Okay? This is a way to text, email, even call these consumers and prospects with your message and your story, okay, to open doors, make more sales. Right-hand side, very similar. We have the Annuity Agency Automator version. It's like a CRM platform on steroids, okay? There's also a database. We have almost millions of clients, prospects in the database that you can market to. Okay, these things it's a no-brainer. It's literally $9.95 a month on the right-hand side. Okay, and then on the left side, we give you a 3-week free trial. So no skin in the game. Let's keep moving forward. I don't have time to dive in further, but this is our co-op annuity lead program where you get a discounted mail drop by being a Levinson agent. We're seeing about a 2 to 3% return. And then just real fast on the bottom left corner, we have agents that say, hey, I want to make the top commissions and I want free leads. Great. Start writing, right? Minimum 150,000. Okay. Bottom left corner. And then boom, we pay you $250 so you can start buying leads. Keep this going. You'll have leads paid for every month. Okay. It's not rocket science. And double dip with those carrier incentives. Okay. The Charles training, I want to mention, if you don't learn anything else from this training today, this webinar today, right, let it be that you were encouraged enough to check out the podcast on the left side or on the right side, the live seminar training, okay? And then if you really want to take it a step further, top right corner, that's the 8-week annuity workshop complimentary. If you want to sign up for that, let us know. But I'm telling you right now, that will move the needle in 2024 for annuity sales for you. Okay, yes, you that's listening right now to us, or if you're listening 2 weeks from now, okay, you got to check those out. All right, my second to last slide, and then we'll put a bow on this, is our future upcoming trainings. So real fast, the top in the blue box there, the top section, social media tips and tricks with a Surety Life. That's going to be a great one because we all know if you're not present and active on social media, you're in reverse on a horse in New York City, which we don't want to happen. Just under that, this is awesome. So again, another value add by Levinson. This is our 3-part annuity training series. It's free. Okay. And we're launching the part 3. And you get a certificate. So you become a Levinson annuity sales professional, new designation, a certificate you can put on your desk, makes it official. And again, it's complimentary. That's 7/11. You can't forget that date. Just under that, Manhattan Life, we're bringing back the best final expense product. And then these other direct-to-consumer products on Insure Me Now Direct, there's about 15 to 17 additional products we're going to dive into. Then on the bottom, life and annuities with National Western Life on the 25th. And then my last slide here, and then we'll wrap up, is our Positive Tuesday quote: lock down a vision of the future rather than a memory of the past. Okay, there's no holding you back. You have enough nuggets now, okay, especially after you listen to the Charles podcast and the seminar training and then the workshop, hopefully, okay? You know enough to be dangerous. It's up to you putting your right foot forward, trying these new strategies, planting the seed. You're going to make a sale, then another sale, and then you'll be off to the races. The sky is the limit. There's no looking backwards. See it, dream it, believe it, do it, okay? Words are cheap. Action is everything, and that's what we learned today. That's what we're doing today. With that said, I'm going to have our question of the day. Whoever answers first and correctly wins. Apple AirPods, prospecting book on us. Make sure our little fingers are on the keyboard. You're ready to answer first and correctly. Question is, I spoke about the last podcast we just recorded. I need to know the episode number and the guest speaker. So you tell me the episode number and the guest speaker of the last podcast that we just launched and recorded. Okay, I brought it up a few times. It's a little hint. Tell me the speaker's name, full name, and the episode number, and you win. Andrew's going to tell us who was first and who was correct. Andrew, do we have a winner?
Yes, it's Marie C. Marie C.
Marie C. The answer was episode 52, guest speaker Charles Samuel. I mentioned it a few times. Check out the podcast on any of your favorite podcast channels or even YouTube, okay, or just find our last email we sent out, which would have been yesterday, actually the last week. We sent out a few. So check your inbox. Have a great day, great rest of the week, great selling. Thank you again, everyone.